Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. It is August 1st, 2025. Appreciate y'all stopping by. We got a lot to talk about, and I have a special little surprise for y'all. So let's get into it. I do want to say, and of course this is not a recommendation, that we may have a substantial change in the condition of the market. This may have to do with a possible higher time frame trend change. We'll take a look at that, but we have more important things to discuss, and that is the business of trading, how to participate in changing market conditions. And the idea of the Trader Lab is to help traders understand the business of trading, how the market works, why it does what it does, how to get in alignment with it at times. And in addition, the Trader Lab community is available to all of you in the Bookmap Discord Trader Lab. And the idea about Trader Lab is a group of traders coming together to leverage their collective experience. There's no cost for Trader Lab. However, there is a requirement. And the requirement is that you're interested in the business of trading and understanding that there's no holy grail, no secret potion, love potion number 9 or anything else. It strictly requires you to build a business from the bottom up using structured trades and you researching them, reverse engineering them, and vetting. Vetting means knowing where your trade shows up, having a statistical edge that favors you in a random environment with random distribution of outcomes. That's the business. And the other part of this business that might be the more important part are the psychological impediments to actually doing it. So if you're interested in that and you've been waking up in the same place no matter how hard you try, then it might just be you haven't really been shown how to master these elements and how to deal with the things that impede you from creating sustainability. And you're all invited to Trader Lab. And like everything in trading, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get to real time, we'll talk. The other part of it is I'm going to be sharing structured trades with you. These are trades that I've shared in the Bookmap Discord Trader Lab community. And the idea of these trades, there is no plug and play. There isn't. What there is ideas and behaviors that you can take and reverse engineer and then find out if you can relate to them and if you can create a statistical edge. Now, before we go much further, I want to share with you a special opportunity. And this is brand new, guys. You don't want to miss out. You can earn 3 months of Global Plus free. And this includes data. And there's a link actually, and I think Bookmap support, if you would post that in YouTube and also in the Trader Lab community for more information on this. And all you need to do is take screenshots of your Bookmap with your trades, which you should be doing if you're in Trader Lab, so you already have them, and post them on X, Instagram, or LinkedIn with the hashtag, and then you can become a blue jacket winner. Up to $600, and it starts August 1st, so you're just in time. So don't miss out on that. Hope you guys enjoy it. Take your screenshots. Remember, if you're in Trader Lab, you already have them. Now, what about if you're following this right now in YouTube and you are not a Bookmap subscriber? Now, they've never stopped me from saying this, but I suspect I might get some pushback, but here's a hint. There's a link in the bottom of YouTube. Now, there's 2 links. One is to the Bookmap Discord Trader Lab community. If you click that one, all you got to do is verify your Discord username. No big deal. You won't be solicited or spammed, and you can get access to the Bookmap server and all the education, especially the Trader Lab. The other link will take you to bookmap.com. Now, here's the thing. If you want to compete, you can download a free digital version of Bookmap, and you can play with it. And you can also, if you choose, show some setups that you take a screenshot with Bookmap, draw some circle arrows and show your trade, and then send it in. And you have the same chance as everybody else, and just post it like it says here. Anyway, there's more information available. Go to bookmap.com. I believe it's Blue Jacket. And correct me if I'm wrong, Dan, you can post that in YouTube. Now, let's get down to the business of trading. This is yesterday. Now, what makes this so interesting? This is an anchored VWAP. Now, I'm not a big VWAP person, but I don't need them in my trading, but it's important because you know what the VWAP is. It's volume weighted average price. So it means that the average buyers are below this line and the average sellers were up. Sorry. The average buyers are here, sellers were above, and they were getting squeezed out, okay? So we know the average longs are in here. Now, the other part is we made a new all-time high yesterday. So what does this do? Buy stops are up here. Now, this day here, to me, we held the anchored VWAP, and we took out the sell stops under here. We held this level. Now, I'm talking day before yesterday. And so for me, coming in yesterday, I was on the long side. And that was okay. And a couple longs. And then we failed, or started failing. Then it was turn the barge around, as I call it, and then get short. And then we ended up in a massive failure yesterday. Now, this is significant. Outside day. And the buyers, this was their last hurrah, which nobody knows until hindsight. End of the month and who knows what else, right? Now, so this is key. Now, I want to take you someplace else, and this is the profile. And I'm giving you a higher time frame look. The outside edge of this whole thing was down here. That's why I anchored the anchored VWAP. I anchored it there because my buyers, okay? So, and this is a higher time frame. But here's the next piece. You'll notice here, this is a low volume area. It's called a low volume or a micro composite low volume node. And essentially what we're doing is we were trading this. And while we were up here, this is where the highest volume was, 6406. And what the market tends to do, it goes, that's too high. And then out here, it's too low. And we rotate. So we're accepting this pricing. Too high, too low, retail. Oh, we're all very happy. So the market tends to rotate on itself, even if it's trending. Goes up, to go down, right? So when we fell under here, I should say today, when we gap under here, it's over, potentially. And that sets up what? The next one down, 6303. And where is the outside edge of all this volume? It's right down here. If we take this out, which we might, I don't know when, it's not my job, I would say go to ground, bunker. Now, is everybody with me so far? By the way, if you have questions, please post them. I'll do my best. Dan, thanks for posting that in the Trader Lab. And how are we doing in YouTube this morning? By the way, there's that link in YouTube, by the way, guys. Be sure to click on that one. The book, it says Bookmap Blue Jacket. I mean, you can win 3 months of Bookmap and data. Come on, And if you don't have Bookmap, remember, use the link in the bottom of YouTube to go to bookmap.com. Download the free digital version. Just don't tell anybody I told you about it. Which means you don't have to be a Bookmap subscriber to have the opportunity to win. I think that's pretty cool. Now, this is a key moment in the world of S&P-age, okay, right here. Now, I'm going to show you something. I'm going to diverge for a moment. If we think this is, as they say, a colossal failure of the buyers, then we might want to be thinking short. What do you guys think? Now, you could trade long, short. You can spin like a whirling dervish. But you may find, if you actually are interested in sustainability, that it is good probability to align with what we might call the advancing army. Counter rotations are like counterattacks. It's kind of like when they say in the military, go out there, hold the line, and thanks for your sacrifice, we'll see you later. And then because you push the advancing army back in a counterattack or counter-rotation, and then the advancing army overwhelms the counterattack, or for us, the counter-rotation, and then continues. Does that make sense? So you guys who are trading counter-trend, it's not that you can't do it, but if you're a developing trader, does it make more sense to save your bullets for alignment with the advancing side? Just a question. So if we consider that maybe the advancing side is the shorts, what do we do about it? Let's go to the ETH. I want to show you a trade. Now, this is a market profile. Now, 63, oh, got to bring you back. 63.74, which is right there. This is the highest volume from yesterday. And think of high volume like the fair price. Now, yesterday, we rejected everything above us. And the market basically hung out down here, which means now this is the fair price in this auction. However, you'll notice where the fair price is. The previous day's fair price was here. If the fair price is now here, might we think that all of this up here is too high? I'm not paying that. Remember, trading is shopping. And we take out the buyers in this tail. Uh-oh. And the new retail price is here. Uh-oh. Watch. This is the auction. It's magic. Random, but magical. There's the retail price. 74 from yesterday's RTH. This is the ETH. We open here in the ETH, and where do we test the ETH high? The retail price from yesterday's RTH. Follow the story. I'm not paying that. And down we go. And this here, this is called the low volume zone. Now, 63.37, going to take you back again, putting pieces together. Now, this is today's ETH, before RTH even happens. Where was this 37.36? It's right there. So what do? We open in the ETH. We test this. Get out of here. I'm not paying that. What about this one down here, which was the high volume or retail price from here? Is this too low, or does it become too high? If we rip through it, where are we trying to go? 63.03. Now let's look at a trade. So where do we go? We rip through it. 36. Now what? We rip, and now these are called singles. All it is that the market on a half-hour basis, these are called TPOs. Don't worry about it. This is back before we had volume. It was time-based. So on a 30-hour time frame, we never came back. And that urgency is an unauctioned area. So one's at 45. And we ripped down here, got under our 36, follow, and we have another single. Urgency. We're out of here. So where is that single? 28. And this now is our retail price in the ETH. So far, are you following the story? Too high from the RTH, ETH high, urgency, I'm out of here. That retail price from last time we were here at 36, you got to be kidding. Single overnight VPOC, the retail price in the ETH. Everybody tracking so far? How we doing in YouTube? Please give a like if you find this useful. Let's continue. Now, I'm going to show you a trade based on auction market theory, auction mechanics, and these are structured trades available to you in the Trader Lab, but you have to, of course, engineer them. So here we are. 28, 36 too high, outside edge, retail price. Retail price in the latest auction. Now, this is called mean reversion. There's a name for it. This is the mean, in other words, the fair price. And you'll notice where the volume tapers. This is what the profile is about. Why does the volume taper? There's less volume. What does that tell you? Maybe there's less buyers. Maybe there's like nobody in here because we ripped. And what's up here? Well, if this outside edge was too low and I fall out, then what's above me is too high. I rip, and now I start rotating. So in mean reversion, you're looking for outside in. Now, let's go to Bookmap. I just want to show you an example. Let's try going to Bookmap. So, where's that single? Here. Where's the overnight volume point of control? Here. Okay? Everybody with me? Where's that naked volume point of control at 36 that we ripped through? Here. So where is that low volume zone? It's here. Okay? Is everybody seeing this? So this is my outside edge. This was too high, and I'm looking for a short to come here. I want to show you the trade because this is what the Trader Lab is built on. It's structured trades. Now there's no, remember, is there precision? No. What is there? Pools, order flow, areas to engage, and then random outcomes, random distributions. And what you're doing is, if you understand market mechanics, what you're attempting to do is alignment. And then, like the rest of us, as they say, let the chips fall where they may. Location, 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 target, 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 sweep. This is the first, and I got resting liquidity. So what do I have here? A sweep, micro high volume structure, location. Let's now, when I say location, it could be here, it could be there, it could be anywhere. It could be there. So this is trading. You didn't think it's mechanical, did you? I wish it was, but it's not. It is much more than that. It is areas of behavior. And then having triggers. You would vet triggers in the Trader Lab. You would know the area and you would know what your trade looks like. Here's a structured trade. Now I'm going to take you into microstructure. I get asked lots in by everybody, can you show me triggers? Let me show you a trigger. Now, before a trigger even happens, you got to have location. You have to be in alignment with the condition of the market, and you have to know the range to get risk neutral and to hit your target. The primary target is this. And then after that, it's, as they say, put your helmet on. So let's look at the trigger. The sweep is the first suggestion. And I'm in my location, which is here. And you'll notice how the volume is thinning out as we come up. That means there's less going on up here. And all we're doing is we're squeezing. These are buy stops. I don't see a lot of stops, do you? And I see selling icebergs. So I'm seeing sellers. I'm seeing buy stops. And what do these are limit sellers? Well, market orders, which show up as aggressors, can be stops. So I'm seeing the delta, which means I'm seeing maybe buyers, who knows, and I'm seeing buy stops. I now have a sweep. Now, and I got this, don't forget. So it could be coming here, and I have the ETH mid. So everything is sitting there. Now, right here, I'm going to mark this. This is microstructure. This, and it's actually a hair lower. It's right here. So I have this. This is a trigger. This is for all you trigger happy traders. So how do we read this? Sellers are here and here. Sweep, antenna up, warning Will Robinson moment. You've heard of Will Robinson? Buyers are there, sell, and I don't know until hindsight. Buyers are here, buyers are here, buyers are there. That's why I get this. Sellers are there. Micro high volume is here. Don't know until I break. When I break, this might be too high. This is my entry right here. This is too high. This is microstructure. Watch. Let me bring you back. So here's what you have. This is an entry. This is also an entry. Let me show you its compound. Here's what you have. This is where the buyers failed initially. There's your sellers are below. Here's your test. This is a short. Brain is gone. Here we had buyers. Buyers. Break below. Micro high volume is here. Now, this is a little more complex. This is really the better spot, but let's assume you're sitting here with your jaw on the floor with the rest of us. Then where is it? It's here. Same thing. So this is fractal. So too high, break, short. What's this? Chop, 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 chop. Too high, break. Watch. Where were the sellers? There. In this fractal. Let's look a little further. So what I'm trying to show you is that even if you're asleep at the switch and if you're going, and you see this, now you have more selling. So you know now this is too high, this is too high. This is the retail price in this auction. Sellers, buyers, they were absorbed. See the icebergs? So I got my sellers, high volume, sellers, short, see it? Now, you may find this nauseating, I understand. The only way you kind of get used to looking at this is by screenshots and develop unconscious competence. And where's our target? There. So the idea of this trade, whether you take it there or there, and by the way, if you take it here, where does your stop go? It can go there, above this micro high volume, or above this, which is a better location. So look at what your risk is. Now, the thing is that's very hard for us is we want certainty, right? Everybody raise your hand. Who doesn't want certainty? Guess what? The need for certainty has nothing to do with this business. The need for certainty is psychological and is a substantial obstacle to you being in this business. You have to kind of deal with certainty because we're in an environment that's 100% uncertain. So the thing about, here's kind of my comment on this, and I'm always talking about this in the Trader Lab because it is a big problem, and this is why most traders, I believe, don't succeed, at least from what I've observed, and I've been trading 46 years, so I guess I've seen a lot. I've coached a lot of traders over the years, mentored them, sat on trade desks, managed trade desks, and all that. So I see the same thing over and over. And I understand that if you hear it from me or anybody else, and all the books and all the gurus out there all say the same thing. There's no secret sauce. There's no holy grail. There are common elements. The common element that takes retail traders out of the business is not, let's quote, setups. You don't need more setups. You need one, only one, and the ability to manage your emotional state. If you can manage your emotional state and execute one, then you can execute 2, 3, 4, 5, 6, 10. Doesn't matter. But if you can't do one, you'll do none. I hope that makes sense. And don't take this as being harsh. What it is don't waste your time. Don't waste your time chasing setups and the next, easy thing. You can go all over the internet world and there's a bazillion ideas. Most of them aren't worth the paper they're written on because everything works randomly. The thing you need to do to be in this business is to find out what has an edge, and it's still going to work randomly. So the point I'm making is when you're waiting for confirmation, you're increasing your risk. Here's a question for you. Is a, quote, confirmed trade have less risk than an unconfirmed trade? If you fulfill your psychological need to avoid risk by taking more risk, have you reduced risk? Have you? Or have you increased your risk in a random environment and only what have you gotten? More risk. Is our job to minimize risk? How do we minimize risk? It's because we operate in uncertainty, and with, quote, certainty, it's still uncertain. Does that sound a little strange, or is that logical? Are you guys tracking? How are we doing in YouTube? Please give a like. Now, so this is the target. Notice what else? The liquidity came in. So our nature is to want confirmation. So we get short here, or we get short here, or, wherever, over here. Where's the entry? There and there. What's the difference in risk? Well, most of us who are controlled by our fear, which is most of us, the difference is you're going to feel your fear. Are you going to be controlled by it? That's the thing. We all feel the same stuff. So the emotions are going to be triggered. What you do about it is going to determine if you're in the business or not. It's that important. And if you don't have to take my word for it. Just look at the failure rate for retail traders. Why do you think they fail? Well, a lot of them are just gamblers and playing a video game. But those who actually learn the business and can't control themselves, they fail also. And that's what I've observed over many years. So this is where you would get in. But your FOMO is going to put you in here. If your stop needs to be here or here, let me see, 23 to, 28, 6-7 point risk versus, what do you think? 2 point risk? What do you think has a better impact? More fear. Target. Okay, so scale. Now let's look at the rest of this. Sweep. Warning Will Robinson moment right here. Anyway, and where's our target down below? 03. And this, wherever that, I don't even know where the ETH low is. But I just want to show you, this is just an ETH trade. It's no big deal. ETH low, which I don't know where we made it, but okay. So this would be your target, and this is your target. Where did this come from? Now I'm going to get into RTH. I just want to show you, this is not complicated. It is random. 6303, target. Okay, so if you took the short, which was up in here, 30, this is where you're going. Does that work for you? You can run this with a 2 lot. I'm okay with that. Works for me. What do you think? Don't forget this, by the way. 3 months of Global Plus stocks and futures data. It's just started. So get your screenshots in and post. That's all you got to do. Is everybody tracking? Now, let's get to the RTH open. Now, based on what we know, now let's talk about what we know. We know this might be too high. We know 03, which is our target, or this. See the liquidity, doesn't matter. You could do whatever floats your boat. I don't know about you, but I think that trade was okay. 30-ish or 27 or 28, 26 down to here. No problem. Take that and run to the bank with it. Get out of Dodge. Now, RTH open. Let's look. Now, do you guys have questions? Post them. By the way, if I can't get to your questions, use the link in the bottom of YouTube. You can access the Trader Lab community. It's a large community. I mean, this is a serious community. but it's professional. It's about the business of trading. And I'm sure a lot of you guys have gone to all kinds of chats and influencers, and God only knows. It's probably different than most. There are good educators out there, but I would say most, well, you just look at your own results and you keep waking up in the same place. Maybe the focus in a lot of these places is not useful. I don't know. And the fallacy I found, at least for me when I was developing as a trader, was everything worked. Everything works randomly. And in your trading toolbox, you might have 200 indicators or something. Well, they all work, otherwise they wouldn't be in there. Here's the other thing. They all work randomly, and doesn't mean they work in a way that gives you an edge. Gamblers win in the casinos. They don't have an edge, and they still win. So, RTH open. Now, this right here is the fair price or highest volume from the ETH. This is a form of resistance. Let's see. What do we do? Amazing. Now, this is called VPOC migration, and this is an advanced process. Now, this is very fast. Now, I'm going to give you a little something here. We have a grid sheet in the Trader Lab that helps us identify something called context. Context is the condition of the market. Now, you don't have to be a rocket scientist to figure out something major happened yesterday, like a failure, and maybe a higher time frame trend change. Lawrence, do I use Bookmap to find the overnight VPOC level? Well, it's in my software. Yeah, Bookmap will show it if you have it set up to show the ETH session, or you could get it off other software, higher time frame software, depending on what you use. Yes. So I have this shows the full session, and this is the ETH only. So this one starts at my time. I'm in a central time zone, US, Chicago. This starts at 5 p.m. my time. This starts RTH open 8:30 central time, which is right here. So what do we have? Well, we're opening in a huge gap. So we're opening out of range. What does that tell us? The market is out of balance. What does that mean? We're rejecting everything above us. And what did the ETH high do? You got to take the pieces. We tested the highest volume price from yesterday's RTH, and it was like, hasta la vista, I'm not paying that. It's rejected. So this is out of balance. Like, nah, we don't want that. I'll catch you later. So market's out of balance. Did we get buying? No. We got the Acapulco cliff dive. What is that called? Impulsive selling. An impulse is a higher time frame participant. They came in yesterday. You notice the change in the range and the volatility and the icebergs. It's a complete change. The last month has been just the small fry. Retail traders primarily, the higher time frame and the volume wasn't there. Now the volume is there. That is a suggestion that the major barge, if you will, or the trend might have changed. And this might be the high of the whenever. We don't know that. It's not our job, but it's a suspect. If we don't get back and take out yesterday's high a day, then you saw the high of this move and this market potentially. And I'm saying if we don't, if we do, that's wonderful. If we don't, then you can look back and say, yeah, I saw it. So we have what's something called a gap and go. Gap and go means get short. What does it tell us in a gap and go? If we don't get two-sided trade, or what's called responsive buying, in other words, you gap and the buyers go, oh, thanks for the opportunity, then we have what's called a potential trend day. What do? You trade in direction of the trend only. That's where the edge is. Now, the market will rotate, and then it's up to you. So let's look. RTH open. Now, this is what I'm going to show you is extremely advanced. Now, part of what I share in this stream are multiple concepts, of course, and different structured trades. This is not what you should do. And it may sound like it's contradictory. What I'm sharing in this stream is what you can learn to do, not what you should do. I will say, though, that the primary trade that we see most of the time, because the nature of the market is to rotate, is to do something called mean reversion. And that's rotational trading. And rotational means that you would wait for counter rotations for continuation. That's what I showed you in the ETH, mean reversion. So this is a different condition, gap and go trend. Anybody who's sitting out long is going, where's the exit? I'll catch you later. Thanks for playing. And we'll give you a coupon to the buffet. Here we go. RTH open, aggressive selling. This is the volume point of control. Now let's talk about what this represents. This is the retail price. It starts at 0. Now we're over here. Okay. This is the chart volume profile. It's only going to show me what's visible here. And this resets at RTH open. So it's only showing me what's on here from 8:30 Central Time. So this little line here was too high. This here, too high. This is the current retail price at this time. I start marking these because basically what the market is, it's an auction. And what the market can do is, if it finds a price that it doesn't like, that's too high, it's going to leave it. I'm not paying that. Think of it like shopping. I'm not going to pay that. And we leave it. If it becomes too high, then I can go lower. What do we know in the higher quote time frame, the intermediate time frame? This was the retail price. So developing, think fractals or Russian dolls, Matryoshka dolls, vertical integration of dolls or time frames. You guys do the same thing, but you call them a time frame. I don't do it that way because in here there's no clock. There's only behavior. So I call it fractals. Just another way to kind of slice and dice it, but I found that I can't hold the market to a clock. I have to hold the market to participant behavior, which is not regulated by the clock, other than the open close, that kind of thing, right? So that's clock-based. This, participant-based, different. So what do I know? I know right here, this is too high. Why? The new retail price is here. That's a variable high volume node. I know this is the retail price. It is too high. It is a variable high volume node. If it's too high and this is too low and the trend is down with a huge gap, what do I want to do? I want to sell it. I can do the following. Now this is different, guys. This is advanced. This is not plug and play. I'm only showing you what you can learn. This is the most advanced concept or trading structure that I share in the Trader Lab. It's the most advanced because it's the most difficult. We're in here 30 seconds. In 30 seconds, you blinked a couple of times. So this is not where you trade. But I want to show you the concepts. Liquidity is here. We pull back the VWAP. Now, if you don't have a way to enter, you still have nothing to do. This is still microstructure. This is out here. This is very aggressive. And again, you wouldn't be doing this. Here, we have something called the low volume node. So this is too high. And we break out of this. This is an auction or distribution of volume. And it's really right here. You break out of it. It's now this is potentially too high. There's your breakout. There's your acceleration. Here's your retracement. This is not a trade you ought to take. You'd be chasing this thing. Me, I'm very happy with not trading this because of the speed and the risk. I'm patient. If I'm jumping all over this, it's FOMO. I just don't care. And why don't I care? I'm interested in being here. I'm not interested in gambling. If I want to gamble, I'll go to casino, get the cocktails, and the ticket to the buffet. And if I go to casino, which I don't do, I know that I don't have an edge, and that I'm basically buying entertainment with my risk capital. Outside edge, low volume node. New retail price. I'm not paying that. New retail price. Let's watch. This is a structured short. Let me show it to you. Remember what was too high? Hold on. I got windows open here in Chicago, so you can hear a little background noise. Sorry about that. So this is my retail price. Let me show you microstructure. Now this shifts down. This is VPOC migration. I mark it. And what does it tell me? This is the new retail price, and everything above me is too high. I know this is an outside edge. I know if I come out here, I can sell it to come here. Same trade as I showed you in the ETH. I also know that if I can't get back above this, because I'm seeing my sellers, that I can be looking to sell this. Let me show you. Again, this is advanced. This is really not, this has to be vetted. And most retail traders have FOMO. They don't even understand what FOMO is. FOMO is being mechanical without understanding how trades work and just being mechanical. That's what you do. You will not succeed. You might not want to hear that because most of the, quote, talking heads out there and influencers are going to tell you, the only thing you need. I'm going to tell you what you need not to do because that's why traders fail. And you might not be getting that elsewhere. I don't know what you get elsewhere. I'm going to tell you, though. And there's a trigger. So you got a trigger here. This is your resistance. This yellow line is the same exact thing I was showing you in the ETH trigger, except I drew a line. Here it's already here. This is where the sellers are. This is where the sellers are. If I get buy delta and I don't go up, why not? Because there's sellers here. And I don't know until the red delta, the aggressors, are below this. What was this? Buy stops. I don't know. I break below. I know I have my sellers. Now I counter rotate. My sellers are here. So I know I got sellers here, and now I have a new retail price. If I can't get above here and I get my sellers, there's my icebergs here, and I don't know until the sellers are below the buyers. Look at the similarity. The sellers are below the buyers. Trigger. Trigger. Where's my resistance? It's here. Sellers are there. I see my sellers. This is my micro high volume structure. Trigger. So I got trigger, short, trigger, short, trigger, short, trigger, short. All shorts. Short, 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 short. If you have an edge in this. And where are we trying to go with this thing? Well, lower, obviously, but let's see. So that's the first one. Now, I'm going to show you some advanced order flow triggers. And these, again, what I'm showing you is not what you should do. I'm showing you Trader Lab processes. And if you think it's plug and play, don't bother coming to Trader Lab. I'd love to meet you and love to see you there. But my objective for doing this is to help traders create sustainability. And I will say, no matter what, this is not for everybody. And part of it has to do with the problems psychologically, which most of us do not pay any attention to. Why don't I combine it with ICT? ICT is nothing but something that's been around forever. And it has a new little label on it. If you have an edge, knock yourself out with it. Me, not so much. There's nothing new in trading, guys. Nothing. The gurus and influencers wrap stuff up and give it a new label. There's nothing new. So you can really stop looking for the holy grail or the only one thing you need. That's all marketing. And, because everything works randomly, but you have to know where to apply it. So, and again, it's just my opinion. It doesn't mean it's, your truth. It's just, I went down so many dead ends over the years, I can't remember, except it's years. This is an order flow trigger. I get my buyers here. Now let's come look at what's going on here. What do I have here? Short to the liquidity. Could be there, could be here, don't know. Absorption. There's my icebergs. If I'm taking a short, I am scaling. I have to get risk neutral. And it could be there. So from there to there to buy my stop, or here to here. If I get another short, then I have to scale here. Why? My buyers are here. And what I don't know, because most of the time we don't know anything, by the way. Assume you don't know. There is no knowing. I know that was a buyer. If I come back here again, I know the buyers here can show up and go, oh, really? And the stops that are under here, which will be whoever got long and is trailing their stop under the swing, can get taken out right here. And then the icebergs could come in and revert back. I know that. Now, I know it can happen. I don't know if it will. But now I have a level. And the idea is this. If I come under here and I get those buyers again, I can revert back here. Or if not, I can sell this. There. You see it? Is everybody tracking? Guys, this is advanced. Are you guys tracking? How we doing? So this is a order flow trigger, advanced concept. Now in TraderLab, this is not necessarily where you should initiate, but you could use this for trade management, you see. First, use it for trade management. Then you can use it for ads. It's all a matter of understanding the condition of the market. Let's look at this again. Let's look at this again. Remember, order flow trigger. Let's come back here. Now, remember, the market is trending. If you do this under different conditions, they will carry you out in a bag. Short, buyers are here. Same, right? Resistance, support, sweep, break, order flow trigger. What do you have here? Order flow trigger. See it? Break. What do you have here? I'm not going to keep going into it, but you kind of get the idea, right? I call them liquidity triggers. You have one here. Okay? So you have, just draw some of these. And by the way, we all take stops, so we got to get over it, okay? What is a stop, by the way? Overhead and cost of production. If you want to be in business, you're going to have to pay your bills. So this, break, test, break, short, off you go. Retracement, short, boom. You take this one, and I'm showing you trade management or entries. It's, again, completely up to you. Still shorts. Now, I'm not talking about the buy side. And the buy side, what I always suggest in TraderLab for developing traders, do not countertrend trade in the trend day. That's like, you might as well just take a gun and put it to your head, because you don't have the edge. The idea is to trade with the dominant side. And then if the condition changes, you're done. You just wait. It doesn't matter. If you think it matters, now you're into FOMO and a video game. The market does rotate, but it doesn't mean anything other than the trade plan. For me, as I stick primarily to one side. It doesn't mean I don't trade countertrend, but I'm going to say for developing traders, I always encourage them just to kind of follow pressure, skew, they pull, change. So all of this is okay. VPOC migration. What is this? This is a potential short right here. See it? Haven't you seen this before? Didn't I just show you VPOC migration? See, these are structured trades. That's why I call them structured trades, because they're structure and it's an alignment with the condition of the market. So the high volume, well, we have a couple things. I'll take you down into micro. I just want to show it to you. I can't respond to this stuff. In other words, this here, I have sellers. I have my liquidity shows up. I have my sellers. I don't know. Okay. I have my buyers here. This guy was absorbed. Look at the icebergs. They're buying. So I got buyers. I got sellers. And it's like, but I'm at my location. You know, this is like real estate. Location, location. Break. Now I have a sweep here. And that suggests to me a rotation. And I don't know. I know my resistance is here, but I don't know. Here. This trigger. Now, this would be extremely aggressive. This is a trigger. So you have a micro trigger here, very aggressive. Trigger, pull back, short. See? I don't know where we went, but wherever we are, we are. Oh, target. Now let's watch this. This is all before 9 a.m. Are you guys okay with that? You see, and by the way, stops, I take them, you take them. What is a stop? Is it a failure? Or if you're following your plan, is it your job? Change. And I think we had a report here too. Change. Right here. Now, what's this? What's this? Short. What is it? It's that trade, the one I was showing you before. Break. Support. Sweep. Break. Short. There. Very fast. If you can't handle it, it's not your trade. It's just the way it is. Short. To there. See it? Trades. I think I broke it. You guys have questions. Now, I've got some more stuff here for you, but now we get VPOC migration going the other way. So this says potentially we found too low. Notice where the support comes in, by the way. It's there. You guys have questions? Let me see what's going on. Ben is asking, how do winning trades not align with your edge reinforce that same behavior? Ben, I don't know. I can't answer the question because if it's not in alignment with your edge, then that's nothing. That's just the way out of the business, Ben. Everybody has winning trades. I mean, everybody has winning trades. The way to prove it to yourself is take any indicator out of a toolbox. It's going to have winning trades and losing trades, right? I have winning trades and losing trades. We all have winning trades and losing trades. The difference is, do I have more winning trades and losing trades? Now, how do we figure that out? Because I have to know I have an edge. If I don't have an edge, I'm going to have winning trades and I'm going to lose. Gamblers have win hands in the casinos, but they lose. It's just random. So any indicator is going to have winning trades. But the better test is get a random buy-sell generator, and you're going to have winning trades. You don't even have to know if you're long or short. You will have winning trades. So when traders trade without edge, they're just gambling. I would say go to casino, get the cocktails, ticket to the buffet, and if you leave enough money there, maybe a ticket's to Adele. But that's not the business of trading. That's just video game and gambling. And that's what most retail traders do. Not because they want to, probably because they don't understand what they need to do to create sustainability. That's why I created the Trader Lab. Everything works randomly, Ben. And the problem with randomness is we are rewarded psychologically by behaviors that don't have an edge because they all win at times. But if you knew, because you could measure a process that, let's just say, 4 out of 10 times you won on a trade and the rest of the time you lost, would you keep doing it? Well, retail traders are doing the things that don't work, and they just keep doing it because of the random reinforcement of a failing process. So they fail, even though they have winning trades. So they always come back to try to make it better. And I understand that. I spent years trying to make it better. I didn't understand. I'm in a gaming business. I'm not in the business of being right. The casinos are not in the business of being right. They're in the business of only playing games that have an edge. And they accept the random distribution of outcomes because the only thing they control is how they play the games. You know, they don't control anything else. They don't control the cards or how gamblers play. So we don't either. So all we control is our edge. And if we play without an edge, we're going to lose. Simple. It's not complicated. Here is a sweep. This suggests the potential for a rotation. Now, the problem right here is this. Let's see what it does. Now, I don't remember any of this, so I'm clueless. VWAP. Now, we have a structured trade in Trader Lab. It's called VWAP to VPOC. This is maybe a disqualifier. And then we have the mid, and we have more. And we have an outside edge, low volume. So the way this would work, and this is very funky right here, this sets up a counter rotation. It's a buy sweep, and we're looking for a rotation. The problem is this shifts up. So this is saying the retail price now is here, and this might be too low. I'm going to label it. So this puts this trade here, this short, now is really on shaky ground. Let's see what it does. Now, per your plan, and I mean you, I mean the collective you, is this trade qualified? It is not. You see? Why? Because if you're trading outside in reversion and this moves higher, the language of the market is saying is there's more volume here than there was there. And if you think of trading like a shopping experience, remember, you go to the store, high volume, which is what this is what buyers and sellers are willing to interact. And if now the volume is higher up here and you can't buy an S&P at the moment here, doesn't that tell you maybe the value of an S&P has moved a little bit higher based on the participant behavior? So then this trade would not be qualified. And then you push through, you see. And again, it's up to you. Me, not so much. I'm very patient. I trade the rotations. I want the range. Just me. Ben, I hope I answered your question. Everybody takes stops, guys, so we got to get over it. Why would you even... Now, how many of you move your stop away because you don't want to lose? How many of you wait for certainty before you put the trade on? Raise your hand. I won't look. How many of you skip trades because of fear? How many of you bail out of a trade on a counter rotation? Raise your hand. I'm raising my hand every time, but my question for me is, how many of you have done that? And then the other part is, how many of you are still doing that? We all have done it. So that's okay. The difference is, are you going to keep doing it? And do you understand why you do it? That's the big thing. Why? And do you know it's not about your willpower? I thought it was willpower years ago. I tell this story, but it's basically, I got one of those big rubber bands, a real thick one, put it on my wrist, And I knew it worked for my dog when I trained my dog, behavior modification. I says, well, works on a dog. Maybe if every time I do these things or I have thoughts, I can snap that rubber band and it really hurt, and I can reinforce and change my response. I guess I'm not a dog because it didn't work. I mean, the option was get a cattle prod and or a taser at this point. And I said, nah, I got to figure out another way to do this. I did, but it was the hardest part of this whole thing. I don't think trading is difficult at all. I think doing the trades are hard because of the randomness. Trading is not complicated. You can learn how to trade, I believe, in the Trader Lab. I don't think that's the hard part at all. And you may go, really? Because you think trading is complex. And let's redefine what trading is. Trading is random. Most of us are trying to solve for certainty, which we all understand. But suppose there is no certainty. How can you get it? Maybe if you can't get it, then it's your psychology that's driving you to believe certain things, that you can get something that doesn't exist. How can you get certainty where it doesn't exist? If you can't get certainty, maybe then you don't try to solve for it. Maybe you solve for uncertainty. Have you ever thought of that? And that's a whole different animal. And what drives us to solve for certainty is our subliminal or psychological need to avoid risk. Primal wiring, very strong. Stronger than anything you've ever even imagined, because you've never experienced it like this. In the outside world, there's order. A red light, you stop the car, hopefully. You step in front of a bus, you jump out from in front of the bus. You didn't have to process it. You didn't have to think about it. It's primal wiring. Well, here we're stepping in front of a bus, and the primal wiring cannot differentiate. So we are then, in response to our primal wiring, to avoid risk, which is our wiring, work good out on the tundra with the apex predators. That's why we're here. Survival of the species. It doesn't work here. So we think the solution is certainty, and we're driven to certainty because of our primal wiring. Is this logical? Dudeman is asking a question from Trader Lab. Besides getting risk neutral, what other risk management rules do you think best apply? I don't think you need anything more than that. Once you get risk neutral, you've gotten better control over your emotional state. But before you even get risk neutral, you have to know where your trades show up, and you have to know if you have a statistical edge. Now, how do you even get a statistical edge, right? How do you do this? Well, first of all, you come to Trader Lab if you don't have an edge, so you can learn how to get one. There's 60 PDFs of structured trades I have shared to kind of give you some things to research and reverse engineer, find, what speaks to you, and then you only need one trade. Everybody thinks, really? Because we're all on the quest for setups. I remember years and years ago, I was researching 32 trades at one time. I could tell you, I wasted a lot of time doing that. If I had focused on one and did a proof of concept, which I didn't understand at the time, and I realized if I could do one and also manage my emotional state, which is the bigger problem, and I could prove to myself that I could do this, it would set me free. It would set me free because now I understood what I needed to do and I could replicate it. I don't need 30 setups. I only need one. I can be profitable with one. And I believe if you can do one, you have the opportunity to be profitable also and build out a business. But if you can't do one, you'll do none. Is that logical? And if you can't accept that, which I understand, that's FOMO. I want more. Why do you want more? Have you ever thought about it? These are the things you need to reflect on. Why is my behavior the way it is? That's really what you got to be thinking about. Why? Because it seems obvious. Why do I want more? Well, I want to make more dough. Of course. But that's not the answer. That's the problem. That's FOMO. That's your psychological need. It has nothing to do with the business. Now, let's look out here. The next trade out here is going to be mean reversion. And I always kind of joke about it. It's mean because this is now retail, and this is too low. So if I'm going to look for a trade out here, I'm going to be taking shorts, and the idea is to come back inside here. Mean reversion. And the joke is, yeah, it's mean. Because what are we trying to do now? We're trying to figure out where's the outside edge, and that's not easy. But this is the primary trade. And what makes it the primary trade is the market most of the time is going to rotate. The reason it rotates, even in a trend down day, is because if the market, the inventory gets lopsided, in other words, if the market is short, let's say it's short, everybody's short. That means everybody is hanging out on one side. What happens? If we run out of sellers and then the market counter rotates, those shorts become the buyers and we get the squeeze. Okay? So that creates counter rotations. Now, if you're a advanced successful trader who has an edge trading with the trend, you can learn to trade counter trend. But if you do it before you can be profitable trading in alignment, you're on your way out of the business. I don't want to disappoint you. I'm just giving you the straight oil from the can. I've seen so many traders that I've worked with over the years not be able to manage themselves emotionally. I probably spend more time in Trader Lab trying to help traders understand and educate themselves about the psychology and the problems. I think anyone who comes to Trader Lab does the work can learn how to trade. I don't think that's a problem at all. I do think the problem is being able to create guardrails. Liquidity is here. Now, the idea of this trade is to try to find an outside edge. This is very hard. And what's hard is where is it? So now the outside is here, these. And the idea of mean reversion, and this is hard, so don't worry about it. But it's the primary trade because this is the most frequent condition, rotation. So if the trend is down, then what we're looking for is continuation shorts, unless something changes. And so far it hasn't changed. So, but there's no location here, okay? And you got this. This comes in. This is interesting, but let's look. This is reversion. Did not get to a location. Look at this. This is a trigger. I would not take it. I wouldn't take it because I'm not at a location. I just work on my crochet. Sellers at 6,283. Now I'm outside. Oh, I didn't even know where we were. This is our outside edge. Okay. This is a mean reversion trade. This is short here. So I haven't seen this, but look what's here. This comes into the book. So I have a skew right here, 500, pressure, outside edge, variable high volume node. This was too high, alignment, ETH low. I'm under 03, which is my kind of the Mason-Dixon line of trading. And this is a short. And then you're trying to go here. Anyway, that's the reversion trade. Now this, you could have taken this if it's vetted for you, because this is also a reversion. But like I mentioned to you, this one I might not take. This one. Trying to go there. And then hold. Or whatever. Trade management. Are you guys with me? By the way, I'm reading something in the lab I want to mention to you guys. How do you do this? How do you build a business? Are you interested in that? Look, seeing me stream here and show you these trades, that's not going to do it for you. I just want to show you that this can be done. And also, we take stops. I take stops. And how do I look at a stop? Let me tell you how I experience a stop, other than emotionally, where I am annoyed, and I'm using the term lightly, disappointed. Okay, who wants to pay bills? Me, I prefer not to, but I do. When I'm taking a stop, first I got to tell you about it. The way I perceive it is not being right, though I emotionally feel the consequence of overhead. I see it as a probe for a location. As long as I'm following my plan, I accept that there's no perfection. I'm in an imperfect, random environment. There's my low volume area. It's right there. So, and there's this. So I'm looking in here to see where. Let's look where. Buyers, 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 buyers. Sellers. Sellers. Where were my buyers? Where's my resistance? Here. It was right there. Where's my support? It's there. What's going on here? Icebergs. There's buyers here. There's sellers there. And I got this, which is like somebody putting up the Great Wall of China here. So I have now structure. Let's just look. And I don't know here anything. If I get this, and don't forget, I got my location. I could put my trade on here, and my stop has to be there. If I don't do anything until this is violated, let me just show you. Again, I just want to show you structure. This is what I do. And I'm sitting here with my jaw on the ground just like you are. Nobody's immune. We're all the same. Don't worry about it. There is no prediction. There is no holy grail. The best you have is maybe. Maybe it'll do this. Maybe it'll do that. Maybe, I don't know. Variable high volume node. This is important. Where did this come from? You're asking me. I'm asking myself, where is it? Here. Wasn't this too high? I'm not paying that. Down we go. So where was resistance? Wasn't it here? If I come up above and test, which no clue, and I'm at an outside edge, no clue, and I get this jump in the book, no clue. What then? Right here, I've got alignment, confluence. Potential short is there, stop there, or here, and then entry. Stop there, same thing. Same thing. Trigger resistance. Or here, trigger resistance. There. Same trade, different. And you have to decide, where you're going to put your stop. Up to you. You sold this, your stop's got to be here or up here. If you sell this, your stop's got to be up here or up here. And once you break this, you can put your stop there. Why? I'm not paying that. Are you sure? Nah, it's too high. Break. Think of it like shoppers leaving the store. This is your pint of ice cream Saturday night in the little store down the street. And this is where the volume is. I'm not paying that. Yeah, but I don't want to go to the supermarket. Retail. I don't want to pay that. The shoppers leave the store. They come back because you like to shop there. It's down the street. It's still too high. Here. Maybe. That's the target. So it's outside in. So what we have is a compound process. This is called mean reversion. That's the mean. That's the target. This in here is mean reversion in a fractal. This is the mean. So we're reverting and then we're leaving it. We're reverting to the volume and then we're leaving it. And then this in a higher time frame, developing daily time frame. Remember, Matryoshka dolls down to here. If not, back here, and maybe out the top. That's trading. Is everybody tracking? Hope you're getting something from this. Oh, I was going to talk to you guys about building out the trade plan, right? One trade. One. Why one? Proof of concept. Here's the thing. You got to understand the condition of the market. You got to understand which trades are qualified. It is not generic. We would, in the Trader Lab, certain trades we take only in one direction under certain conditions. Other trades that are like in a trend configuration, at least for me, and it's not a recommendation. I trade both sides up, down, and around, but I have some experience, 46 years. So, but for developing traders, you don't need to be doing that. You need to be able to trade one trade consistently with discipline and learn to overcome your emotional problems, which we all have, by the way. I still feel the same things I felt 20, 30, 40 years ago, except now I'm familiar with them. And I understand if I don't manage those emotional triggers, and that's what it is, an emotional trigger. What is an emotional trigger? How about being drunk under the influence of chemicals, hormones, cortisol? You guys know anything about this? You should spend more time learning about yourself than you do about trading. Because to be able to trade, you have to manage yourself. Trading is easy, except it's random. That part's not easy, but it's not complicated. Learning about your emotional stimulus and your self-destructive responses, that's hard. Because it works for us in the outside world. You see, that's the whole, the conflict. What works outside, stopping at the red light, avoiding the bus. Here, we got to jump in front of the bus. And that means we're going to step intentionally into risk. We're wired not to do it. Works really well, as you know. So you need to understand that. And then if you don't understand how to manage it, come to Trader Lab. I can't say that I'll be able to help you solve it. I can help you. I don't know if you can solve it. And there's a lot of other traders in Trader Lab. Remember, this is a professional community. Our senior trader has over 50 years, and we have everything in between. And it doesn't matter how long you've been trading. We all face the same issues. The difference is if you come to Trader Lab, you might cut years off your learning curve because you're going to see real traders doing trades. You're going to see the same problems you have because we're all the same. It's just, where are you on your journey? And can you build structure around your psychological impediments, which is what I had to do. I had to basically build guardrails. That means if I lose it, and go on tilt, I have to stop trading. And the impulses are so strong that our nature is to ignore that, right? You've done it, right? Revenge trading. Oh, I got to make it back. Or I don't take a trade, let's just say, and it goes 20 points. What is my mind doing? My mind is thinking of the 20 points, and I want to get it back. Like the market owes me the 20 points? No. So now I'm trading for the 20 points, not my plan. Does that happen to you? Or I take a stop. I put this trade on here, and I put my stop here because I don't want to lose. I get stopped out here. Now the trade sets up here. I don't take this trade, and I shouldn't have been stopped out anyway. Or I get this, it comes here, I get this, and I pull, I'm not scaled, and I start moving my stop down behind it. It counter rotates, I get taken out, and then it goes to target. Well, what's my trade management process? Here's how to, in my opinion, to start. Number one, come to Trader Lab. There's no cost for it. So there's no excuse, okay? Not to better yourself. That's number one. And it doesn't matter what you've done in the past, what you're doing now. Doesn't matter. The worst that's going to happen is you're going to leave Trader Lab with more than you have today. So let's get over that part. There's a link in the bottom of YouTube. All you got to do is confirm your email. Make sure you're not spam. Yes. You will not be spammed by Bookmap or anybody else. You'll never hear from anybody unless you want to. Trader Lab is a serious community. It's not romper room. It's about the business. And by the way, do I sound insensitive? It's only because I'm doing this for so many years, and it's broken my heart to see decent people who had the potential to fail in the business. I can't stand it because, of course, not everybody's cut out to do this, but a lot of them just could not control their impulses. And they were more, and what happens is we are so driven to play the game. And it is a game, if you will, if you approach it as a game. But a video game, there are better video games than this, because this one costs you. And it has emotional wear and tear on you, how you see yourself, how you relate to your family. How you know, there's so much wrapped into this. Well, this will be the most challenging thing you ever do. And if you come to Trader Lab, you're going to find traders just like you. And we're all on the same journey. We're just at different places. That's all. How do you do this business? One trade. One. If you can do one, you can do more than one. If you can't do one, you'll do none. Because by doing one, you have to put a number of elements together to understand where a specific trade is qualified, why you'd only take shorts today, if that's your plan, and why mean reversion is the only way to trade this condition if you're a developing trader. How many of these do you need per day to become a consistent, profitable trader? You only need one trade. And I don't mean take one trade. I'm talking one vetted, structured trade that has a statistical edge that you can develop the discipline to execute when it shows up with your fear and everything else. And what I was talking about was when you take a stop and then you skip the next trade, you're now trading this last trade. You're not trading the next trade. I take a stop, I feel just like you do. I mean, whatever those emotions are, me too. It's all the same. The difference is I've taken so many stops over 46 years of trading, thousands of stops, and thousands of trades. I've gotten kind of used to it, but it's never changed how I feel about it. It's what's changed is what I do about it. I just take the next trade. I go up, and instead of going, oh, I failed and I was wrong, I go, I guess that's not the location. Where is it? Am I following my plan? Am I in the right area? There's no precision, so I can't be precise. And why do we seek precision? Because we want to avoid risk. Precision is another term for confirmation. Do you hear this in your own vocabulary? Is this interesting? Yeah, hi, Jim. I hope you're getting something out of this. This is the Trader Lab. And by the way, I want to remind all of you guys, number one, there's an open invitation for all of you, whether you're a Bookmap subscriber or not, to take it, to participate in a contest. You can get 3 months of Global Plus stocks and futures data. 3 months. And it just started. It's $600 in Bookmap subscription value. Global Plus, you even get a Bookmap branded blue jacket. How about that? You get an exclusive invitation to the Bookmap Academy. It's an elite circle of top traders. And you stand out in the trading community. You get a blue jacket. Kind of nice. But I think this is pretty cool. Now, what do you do? How do you do this if you don't have Bookmap? There's a link in the bottom of YouTube at bookmap.com. And you can download a digital version of Bookmap. And all you got to do is post Twitter, LinkedIn, Instagram screenshots of your trade setups. Do some annotation, a little this, a little dab, post. That's all you got to do. And you got 30 days. I'm going to say, come on, $600, free Global Plus. What are you waiting for? Me, I'd be all over it. When I got Bookmap, and I got it early on when it first came out, 2015, I think it was, nada. I got my checkbook out. You guys have it much easier. That's all I can tell you. And where are we? Target. This is, what is it? Mean reversion. Can you learn this? Here's my challenge to you as a developing trader. Why not? Ask yourself, Why not? Is this a trade you could learn? Why not? Are you fearful? Join the club. Are you going to learn about fear? Come to Trader Lab. Can you learn to manage fear? Come to Trader Lab. And of course, past performance is not indicative of future results. The challenge to sustainability in this business is not setups. That's easy. I give you 60 PDFs of them. The challenge is doing it and overcoming the psychology. Here's what the 60 PDFs look like. These are actual trades. There's no plug and play. Nada. Does not exist. Some of this is research. I was working with Bookmap developers. 90% of my research is in the round file, maybe more. I have bookshelves of binders. This is order flow phenomena. I was in a trade. I was sitting short, and this is a bracketing algo. Look what happens. They raise here. They pull up there. What does that do? Takes the lid off. Explosion up. I exited right there. Do you think having a high-tier order flow tool and understanding how to use it might give you an edge? This is a business of edge, statistical probabilities, which is edge, and a lot more. You can learn this in the Trader Lab. And a lot of these that I'm sharing here are some of the structured trades. And there's more. These are actual trades. Some of them are just screenshots, and some are whatever. But it's there. You can download these. And there's a library of webinars also, if you're inclined. In fact, let me show you the Trader Lab community. Remember, this is a serious community of like-minded traders. There is no cost. You can visit. There's a document section and a library of webinars and streams that may help you out. Start with the primer webinar. It's got about 34,000 views. The Trader Lab is a large community. And it's serious. So it's business, guys, And I know there's a lot of romper rooms out there and all that. That's fine. That's good entertainment. But this is business. Stop gambling, start winning. You might want to think about that one. And what is the Trader Lab? This is an advanced trading methodology. Now, advanced doesn't mean complicated. I know we always think, it's advanced, it must be complex. No. We think the answer lies in complexity. It does not. The answer is actually simple. The psychology is where it's difficult. This is Trader Lab. This is all going on here. Tons of stuff. I can't spend more time here with you, but here, pre-market mental preparation. Do you have that? You need to anticipate FOMO and follow the steps below. This is one of our traders. Volatility will trigger FOMO. Missing a trade will trigger FOMO. Step by step, when you recognize Hyde, and that's what I call it, Jekyll and Hyde. Hyde's the lunatic under the hood. Journal your emotions. Deep breathing. Look left. See what's going on. There's loads of this. Trade plans, processes. And the error cost calculator, which Greenie, one of our participants, created for us. One of the things that helped me early on was quantifying my errors. What does it cost me? Instead of just making a note and turning the page, same thing you do. Well, I made it tangible. I found that I was taking $3,000, $4,000, $5,000 a week, $10,000, $20,000 a month, and throwing it away. I wrote a check out to my least favorite charity, and I put it on my monitor. And every day when I would trade, I'd be looking at that check. I can tell you, it motivated me because I quantified my errors, which I didn't understand, out of sight, out of mind. These are the kinds of tools, and there's no cost for it, not to mention the leverage of the community. But again, it's available to all of you, and there's no cost. And I'd like to meet you in Trader Lab. I've helped a lot of traders. I can't say this is a solution for you because that in the end is up to you. It's not up to me. But I think you can really go pretty far in understanding the business you're trying to be in and maybe get a different look at it from a different angle in a professional community. Please give a like on the way out. Review this stream over the weekend. You can learn a lot. Also, visit the Trader Lab. Use the link in the bottom of YouTube. There's no cost. There's that library of webinars. Take a look at those. Start watching them. You're going to see something, a consistent process applied in a random environment, only taking trades with an edge. Thanks again, guys, for visiting Trader Lab. Look forward to seeing you on Monday. Trade safe. If you don't have a plan, you might want to consider getting one. Start potentially winning and stop gambling. Thanks again. See you Monday. And thanks for visiting the Trader Lab today.